Markets are pulling back, and one data release is at the center of it all. Stock markets around the world moved lower this week, dragged down by weakness in technology shares. The sector had been one of the biggest drivers of this year's gains. Now it is leading the retreat. The reason comes down to one thing investors are laser-focused on right now: Friday's US jobs report. The report, published monthly by the Bureau of Labor Statistics, measures how many jobs were added or lost across the American economy, excluding farm workers. It is called the Non-Farm Payrolls Report, and it is one of the most closely watched pieces of economic data in the world. Federal Reserve officials pay close attention to it. So do bond traders, equity investors, and central bankers from London to Frankfurt. Here is why it matters so much right now. The Federal Reserve has been trying to bring inflation down by keeping interest rates elevated. Higher rates make borrowing more expensive, for businesses, for consumers, for everyone. That slows spending, which eventually cools prices. But it also risks slowing the economy too much. The Fed is trying to thread that needle. A strong jobs number complicates the picture. It signals the economy is holding up, but it also suggests the Fed may not need to cut rates anytime soon. Markets had been hoping for rate cuts later this year. A robust payrolls figure could push that timeline further out. A weak number does the opposite. It raises recession fears, but it also builds the case for the Fed to ease policy sooner. Technology stocks are caught in the middle. These are companies whose valuations are built largely on future earnings, profits expected years from now. When interest rates are high, those future profits are worth less in today's money. That is why tech tends to fall when rate cut hopes fade. It is also why the sector swings harder than most when uncertainty about Fed policy rises. The hesitation is visible in trading volumes too. Many investors appear reluctant to take on large positions until they see the data. Lighter volumes mean that moves in sectors like technology get amplified. A relatively small amount of selling can push prices down more sharply than usual. This is not just an American story. The European Central Bank and the Bank of England are watching the same dynamics, balancing growth risks against inflation that has proven stubborn. A strong US jobs report could reset rate cut expectations globally, not just in the United States. The practical point here: when a single data release is driving this much caution across global markets, that is a signal to pay attention to positioning, not just price moves. This briefing is brought to you by First Financial News, clear, daily coverage of the economy and markets at firstfinancialnews.com.